But let's continue then with a big corporate voice joining in on the show. We've got Anil Sardana. He's the Managing Director and CEO at Adani Transmission, here to talk about the strong demand drivers for Q4, the collection efficiency, as well as their outlook on green transmission plans. Many thanks for taking time out. To begin with, I just wanted to understand what the size is of the current TBCB or tariff-based competitive bidding pipeline and how you're seeing it moving in the near term.
So good morning and thanks for having me over. Like ever before, the demand for the tariff-based competitive bid projects continues to be very healthy. That's quite manifested in the kind of demand that you're seeing now. After COVID, with more programs going in terms of industrialization, more programs in terms of more commercial activities, people getting back to offices, one has seen tremendous uptake in the power demand. And in fact, in even a city like Mumbai, which otherwise would not even see more than 1.5–2% in a normal year, this year we are expecting 6% growth. So it's actually crossed all kind of projections before. But I guess our preparedness in this count is holding us at good stead. And we're very happy that all companies on all fronts in the energy domain are doing exceedingly well. So the pipeline will continue to be good. And we look at something like 52,000 crore of projects which have already been announced will soon find their place in terms of ordering, etc.
2,000 crore, just to get it right, would be the capex spend in the next 2 to 3 years?
As far as our capex is concerned, it's been, following the predictions that we have been making. The guidance has been that we will do close to about 5,000 crore each year for next 2 to 3 years is already in line of sight. In the current year that we closed, we did 5,500 crores. And in the coming years also, we will remain with that guidance of 5,000 crore each year.
Fantastic. So I'm just going to go ahead and talk about, the kind of push that we've seen from the government side, smart meters. What kind of opportunity are you looking at in this space? Can you guide us as to how much market share as well you're targeting?
So the smart meter program, as we all know, is one of the coveted programs of Government of India. It's actually 25 crore meters by 2025, which is quite a steep change from the current meters that are installed across the country. And there are not too many players who can actually sustain it for 10 long years, which is part of the standard bidding concepts. And therefore, we have decided that we will work with partners and make sure that we will bring the solutions across India. So we're looking at something like 20 to 25% market share. And our desire is that this actually brings to bear the reforms. And as you all are aware, that ATL is completely committed to distribution reforms. And therefore, we believe this is one subset of that larger objective of ours. So we will participate in this with tremendous amount of reform agenda.
The IHC capital infusion, when is the transaction expected to close?
The IHC transaction, as you all know, we have got all the approvals, including the stock exchange approval. And the transaction is expected to close in next 7 to 10 days.
And broadly, the question which everybody wants to understand is that what are the initiatives which companies are taking at individual level on the ESG space? So can you define that for us?
So can you make the last part clear? On which space?
ESG, sir. Environment, social and governance.
Oh, okay. ESG. Sorry about that. I got that clearly now. In fact, as far as Adani Transmission is concerned, ESG is one of the very sincere agenda. And, you've seen the change in terms of the external accreditation that we have got from global agency like S&P Global, which clearly puts us into top global bracket. And while that's a manifestation in terms of the efforts we are putting, but since you asked about efforts, on all the three fronts, whether it is environment, where company has done initiatives which are very far-reaching. For example, in Mumbai, the Mumbai Green Initiatives offer customer the choice to buy green power. But more important, on our own, we will be 30% in terms of our bulk electron purchase from green power by end of this year. In addition to that, we are still continuing our sourcing spree. We have placed orders for sourcing green power. And in Mumbai, we will be whooping 50% by 2025. Now that's rare. I guess no DISCOM will have this kind of a number to claim in the Indian context. Besides this, we run all our projects, whether it is substations which are being made completely green in terms of auxiliary power being replaced with green power. Similarly, the water harvesting, all our substation building have become net water positive. So we collect more water than we actually consume. Several other initiatives in terms of social factors. All the communities around our establishments are the target communities where tremendous amount of quality of life improvement imperatives are being pursued. They are very effective programs. We watch the impact of our initiatives. And on the governance side, we have now more independent directors on ATL, including the international directors, which brings tremendous governance standards to the company. The audit committee is without any of the nominee directors. It's entirely independent. So all in all, a very firm commitment to ESG. And the good part is that various recognitions that we have got in the last 1 year clearly substantiates that.
Absolutely. One last question from our end. I wanted to understand what your own view is on the current power demand and the kind of challenges it is posing in terms of coal inventory and the power purchase cost.
Yeah, in the current situation, that's a very pertinent point to respond to. I would say that the power demand typically in these months has always been like this. There is always a growth when the summer sets in across the country. And prior to the monsoon showers, we always see these kind of demands. But in the past, we have managed this well by virtue of buying imported coal, supplementing the gas supplies. What has changed this year is that the coal prices in the international arena as well as the gas prices are way too high. With the result, it completely jacks up the cost of generation, while the imported coal availability itself, because of the ongoing geopolitical issues, has been a challenge. But more important is the affordability has been a big question. DISCOMs, which as it is have challenges in terms of their payment situation, find it very hard to absorb such an expensive power. When the cost of generation itself hovers around 9 rupees, 10 rupees, for DISCOMs to shell out that kind of a money adds tremendous pressure to their ongoing fiscal issues. So the coal issue domestically is being dealt very well. I think Ministry of Coal, Ministry of Power, Ministry of Railways, all are making absolutely sincere effort in making sure that every coal that's dug is transported, reaches out to the generating units. But more important point is, it is this external aspects of gas going beyond $30 a million BTU from $3, and coal moving to something like $275 up from $60, $70. That's changed the entire paradigm. And I guess we will have to wait for those situations to ease up a bit, as also for monsoon showers to come in and bring the respite to the demand situation. And you will find that once again the sector will be able to manage the profile quite well.
Mr. Sardana, great to have you on the show today. Thank you so much for taking the time out.